All right, guys, welcome back. Thank you for being a part of our financial field day. It's been filled with a bunch of information. We've had budgeting 101,
Budgeting
right? We
101.
talked, there was Lotto Styles and the Dope Day Maker. We had credit and investing with Latoya Fowler and the Fowler Group. And now we have my personal accountant, Mr. Ivory Mims from IMG. I'm going to let him tell you more about him. But when I got with him, I was able to structure my business in a much better way so I can manage my finances and do the things that I wanted to do, invest. And here we are. We're here at Premier Barber Institute. A lot of that is contributed to how I manage my finances. Thank you to this gentleman right here, Ivory Mims. So please, guys, make some noise for Ivory. And we want to hear your questions online. So let them know if they have any questions online, they can hear you.
Yes, sir. That's right. And thanks for the online audience. Thank you guys for allowing me to participate. I don't ever take it lightly when a country boy like myself get a chance to talk to anybody. I like talking to business people because business people, I think, have some of the greatest ideas. And what I see is not students. I see business, 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 and that's how I approach everybody. If you're doing something for yourself and you're earning a living from it or about to earn a living from it, I see you as a business. That way, in my mind, you're not minimized by saying you are just something. I see a business, and it doesn't matter the money. It doesn't matter the money, how much money you make. I see a business, and I approach it that way. So just to give you a little background about myself, I've been around this thing for quite a while, and here's some information for you. I have a master's in banking, strong concentration in taxation. My wife, who works kind of with me, for me, she don't really work for me. You know, most wives don't work for their husbands. They run them. But my wife I've been an accountant practice for 35 years. My wife's been a practicing attorney for over 20 years. She has a solo practice separate from mine. But that shows you the education. I only do that really just to let you know that I didn't start yesterday. I've been around this thing for a long time, and I've been around professionals for a long time. I have only one small objective, and that really is to show you really how the IRS rules work with us every day. If you consider yourself a business, now the Internal Revenue Service consider you a business. If you earn income opposite wages, you consider it a business, meaning you don't get a paycheck from someone. Even if you don't have a license for it, they consider you a business because they want a piece of it. If you earn it, they want a piece of it. Now, it's up to you as a business person to determine how much of that piece they get, and we're going to share some of that with you. But also, we're going to assist you in understanding how the rules that governs tax avoidance and not tax evasion. Anybody know the difference of those two things? I know I'm moving, but anybody know the difference between tax avoidance and tax evasion? You got to talk to me in this class. Talk to me. What's the difference? Go ahead, sister.
Tax avoidance is a way of getting out of paying the taxes as opposed to you just not paying your taxes.
Okay. One's legal and one's not. Just that simple. One's legal and one's not. And here's a simple way of breaking it down. In your business, your barbershop business, you earn traditionally $1,000 a month. Let's say you earn $1,000 a month, $12,000 a year. I'm sorry, $1,000 a week. I'm sorry. So that's $50,000 a year. But because of your personal situation, you decided to put down I only made 30. That's tax evasion, because that 20,000 that you didn't put down, you're not telling Uncle Sam that you made it. It's just that simple. It is just that simple. And we're going to talk about how lifestyle dictates tax evasion or tax avoidance. Now, as I said, I was in your business. I've been around since '86. Some of you all weren't born in '86. I now have clients, well, I've had clients in 34 states, not 22. A couple years ago, I kind of downsized a little bit. Didn't want to travel as much. But 34 states I now have clients in. We do over 3,000 business returns a year, primarily for people who's making less than $5 million a year. Now, just because I'm up here in a pretty suit, don't trust nothing that I say. Toya said the same thing. Y'all trust her? Don't trust me. Check me out. Check me out. I always tell people, Anybody that's going to get into your finances is going to move into your house. So I got to play a quick game here. And I talked with Miss Janine earlier. So Miss Janine, I want you to play this game with me, okay? Pretend we're going on a date, all right? So now, I just sat down with you, and I'm going to ask you a question and go along with the questions. As you can hear Janine kind of talk loud so the mic can pick you up, okay? Miss Janine, how you doing?
I'm fine, thank you.
How's your day going?
My day is going well, thank you for asking.
Okay, now remember now, we're on a date, right? How much money you make?
What do you mean how much money I make?
Okay, would I get the answer from a date, right? That's how a traditional date would go, right? She just hired me to be her accountant. Play the game, okay? Miss Jean, how's your day going?
It's going well.
How much money you make? If she's hired me, do she have to tell me? Do she? If she has to hire me to be her accountant,
Yes.
you have to tell me, right?
Yes.
So it's easier for me to get into your personal business quicker from this position as I would have been if I was trying to date you. That way, what I'm trying to tell you is there's a lot of folk that's cute up here that's trying to get you information. Don't trust them. You check them out. Every question that thank you, Ms. Janine. Every question that I ask you from a professional standpoint, you got the right to ask me. Every question. Now, what am I going to ask you? How much money you make? If I ask you how much money you make, you think you got the right to ask me that question? Yes, you do. Why not? If I'm in your business, I'm the professional. See, this is what happens. This is really what happens. The reason most of us get taken advantage of is because we don't ask the right questions. If I'm in the business of finance and I'm trying to help you with your situation, don't you think you need to know something about mine? What if I'm tight on money? What if I'm tight? Things are rock bottom for me, and I approach you to do some work for you. That gives me freedom or an openness to charge you anything I want, right? Now, you don't have to pay it, but if I'm hurting for money and I'm in the finance business, I'm going to try to get as much from you as possible. So don't trust folk just because they got a pretty suit on. You check them out. That's why I put my Dungeon up here. Now, when I say I'm in your business, and this is for folk all over the country, I have a beauty and barber supply store. I've had it for years. My real estate services, I'll talk a little bit about that. I used to buy real estate for the industry. I did your accounting. I knew you can afford it, but your papers weren't right. I think Ms. Toya talked about that. Your numbers didn't line up. But as an accountant, I can get your numbers straight. It takes 2 years of tax preparation to get it done. But I will buy the house for you, and you buy it back from me. I did that for years. But in that process, I accumulated 68 pieces of rental property. 68 pieces of rental property. Can you imagine those checks coming in? That was some big money back in the day. Now, I've had those properties for 20 years now. I just sold 50 of them starting in 2016. I have like 15 left now, but I keep them for income-reducing properties, for tax-reducing properties. My financial services, accounting, bookkeeping, tax preparation. My neighborhood centers is U-Haul, FedEx, postal ship centers, convenience stores, laundromats. I own all kinds of stuff. Now, mind you, all that stuff came about because I didn't think anybody would ever give me a job. Now, you guys are doing something that I never thought I could do. However, I did do it. I went to school to be a nail tech way back in the day. I have a nail license. I mean, it's not up now, but I did nails back in 1984, 5, 6. Had a nail line, went across the country, sold out to a company called Dudley Products. You might know Dudley Products? Yeah. So we had a nail line called Q Nails back in the day. But my neighborhood centers fall under all of that kind of stuff. So I had a lot of different businesses, and I still got quite a few right now. So I'm not an accountant. I'm telling you all this just to give you some background, because the stuff that I'm sharing with you is not theoretical. It's practical. Most accountants, they don't practice business. They do books. So if they're just doing books, they really can't help you. That's why you have to interview people. You have to talk to professionals about your business and everything you do. And of course, my wife has the law practice. So let's keep on moving. And if you need to stop me and ask a question, please feel free to do so. Any business person, all business people, if you don't have these items, you're not a business person. If you don't have these items and you claim to be a business person, if you don't have them, you're not a business person, because this is what your bankers are going to look for. Ms. Toya kind of led to some of that. You should always keep up with your tax returns and have at least 2 years always available. Always 2 years available, business and personal. You should understand what a P&L is, a profit and loss. Anybody know what a profit and loss statement is? Talk to him if you do. Yes. What's a profit and loss? Help me out. Your deductibles. Well, it's part of it. The deductible things that come off from your profit are deductible, so that could be a part of it. But any other definition for profit and loss? I'm sorry. Say again. It is on the business side, but I'm looking for some terminology, some different terminology. It's your income minus your expenses. That's all a profit and loss is. Income minus your expenses. And every business will have it. Every business will have that. You should also have a separate bank account for your business. If you're doing a DBA, you don't have a business account. If you're doing a DBA, Ivory Mims doing business as Ivory Mims Group, under my personal social security number, that's not a business account. That's a personal account. It's not a business account, and it's not registered as a business account. So when you go to buy stuff under your business name, and the banks are asking for 2 years bank statements, you don't have that because you're a DBA. You're a DBA, doing business as. So you should have a separate bank account from your business underneath your employer identification number, and we'll talk a little bit about that as we go on. You also should understand, I don't really deal in check stubs. Most of my clients do owner's draw, which means they pay themselves. But you should also understand what a personal financial statement is. A personal financial statement is something that every business person should at least have a working knowledge of. A personal financial statement is nothing more than your complete list of your assets and your liabilities, everything that you own. Here's how they look. Here's some forms that we talked about. This is a profit and loss statement. Income minus expenses. In the barber's business, it's the money you make from the behind the chair minus your expenses, your booth rent, your cell phone bill, your car payment, things of that nature. Okay? Let's move on. Profit and loss is all, if you're doing a Schedule C, we're going to talk about the difference of these here in a minute. Talk about the difference. If you're doing a Schedule C, that primarily means you're a sole proprietor, and we're going to upgrade you from that. But you're going to file that with a 1040 tax return. If you're filing a business return this way, you don't really have a traditional business. It's an extension of you, but we're going to show you the difference of why this situation doesn't help you much from a financial standpoint. Okay? If you're doing a corporation, I deal mostly with S-corps. Some people do the LLCs, can file on this, but I do mostly S-corps. But if you're doing an S-corp, you're going to file on 1120S, and you're going to file on a K1. Now, if you're taking notes, you don't have to take all the notes in the world because I got all this stuff in a book. Okay? All this stuff is in a book. Now, it's a cost to the book, but it's an investment to you. This is your personal financial statement. It's put out by the SBA, but a lot of other companies do it as well, but the SBA has its own financial statement. All your assets, cash, IRAs, life insurance, real estate, automobiles, personal property, those are assets. They're not real assets, but on paper they're assets. Your liabilities, people you owe money to, mortgages, loans, things of that nature, okay? Now, how all this fit into your business? Because you're a business person. Don't minimize yourself thinking you are just a barber, just a hairstylist, just a real estate agent. You are a business. If you take that attitude to the world, it's going to come back the same way. Most people think of what they do as their job, but no, it's a business, okay? Let's keep on moving on. Because how you set yourself apart is your structure. And this right here is the nut and bolts of this whole thing. Your ABCs of tax plan. Let's run through this real quick. Most people, when they come into business, or at least when they come out of beauty school or their first introduction to business, they don't know how to do their books, they don't know how to do their filing, none of that. But anybody that starts a business, If you make over $400 in any year, whether it's cutting hair, selling shoes, selling face masks, anything that you do, if you make over $400 a year, Uncle Sam says he wants to know about it and you should file a tax return. If you have investment or passive income, anybody know what passive income is? Passive income? Talk to me. Yes, sir. I'm sorry, say it again. That's a good idea. Money that requires you not to be a part of it. So give me an example of a passive income. Anybody got an example of passive income? That's not passive. That's not passive. That's not passive. I heard property. Somebody said property. Rental property that you don't actively participate in. So, for example, like Ms. Toya said, she had a few pieces of property that she just kind of manages to get a check. That's investment income. So if you do over $1,400 a year in investment income, you have to file a tax return. Now, if you own a barbershop, beauty shop, and you don't actually work in the barbershop, beauty shop, that's passive income. Okay? So just understand what it is, but you have to file a return based on that. And then when should you file? Right now, we're filing now. April 15th for most of us, unless you file an extension, and that's a strategy for a lot of people. I file extensions all the time, personally, because I personally don't pay a lot in taxes. And I'm going to share with you how that works for all business people. It doesn't matter the zeros that you earn, whether it's $30,000, whether it's $300,000, whether it's $3 million. There's a strategy behind all of this stuff. And if you know the strategy, you'll come out a winner. Okay? Also, you got to know who you're paying. How many of us thought that the IRS was a government agency? Yeah, most of us did. Most of us did. The Internal Revenue Service is not a government agency. Let me tell you how that works. How many of us have actually had to pay taxes before? Okay. When you made your check out to pay your taxes, who'd you make your check out to? Think about it. Who you write the check out to? Treasury. Say it again, sir. Treasury. The Department of Treasury. Exactly right. The Department of Treasury. If you got a notice in the mail, a late notice, or penalties, who did that letter come from? The IRS. Thank you. The Treasury is a government agency. Who did you make your check The IRS is quasi-governmental, supposed to be nonprofit. Their only job is to collect revenue for the Department of Treasury. Now, how do we know it's not a government agency? Who is the highest paid government official in the United States? Highest paid. Come on, talk to me. The president. What the president makes? $450 a year. Give me an idea what the director of the Internal Revenue Service makes. Throw a number out. Throw it out. Come on. How much? More. $832,000 a year. The director of the Internal Revenue Service makes, that's more than the president. He is not a government employee because by law, nobody can make more than the president. So when you file late and you don't take those credits and you don't run your business properly to get those credits, guess where that money goes back to? Profits to the Internal Revenue Service for them to pay people $12 an hour to mess up your taxes and not answer the phone. You feel me? Of course, you got to pay the state. Some of you got local tax. And unemployment, you got to pay that as well if you get unemployment. Now, let me tell you something, what's going on right here. With the PUA, the Pandemic Unemployment Assistance, for most of us, if you are self-employed, considered self-employed, small business corporation, gig worker, you don't pay into the unemployment system. So that law that they created to give you unemployment was a law that was just created. If you're self-employed, the unemployment system owes you nothing because we don't pay into it. You don't pay into unemployment if you are self-employed. You with me on that? So for those in TV land or internet land, if you didn't pay into the system, that law was created just because the nation went through the pandemic. You're not entitled to that. Okay? And then, of course, now, there's a way, too, for you to get unemployment if you are self-employed. And I'm going to talk to you about that because it's a strategy of doing that, especially with families, husband and wives who are having kids. It's a strategy of that. Now, what really happens and where you really win is your structure. Where you really win is your structure. And this is going to kind of throw some of you off. Most of us, you've been to beauty school, barber school, you just started your first business, real estate, insurance company, no matter what. You are automatically a sole proprietor whether you ask for it or not. That's what you are, automatic. It's easy to get set up. You get taxed as an individual, but you get to keep all the money. However, what's your name, my man? Matthew? Matthew, barber? You're a barber? Coming out to be barber? Okay, so Matthew got a barber shop, right? I just got my hair cut at Matthew's shop. I tripped over his chair, and I broke my leg. Matthew has $500,000 worth of insurance, but my break was so bad I sued him for $1 million. Where does the money come from? Come on, talk to me, y'all. Where does the money come from? The remaining money, yes. Where does it come from? Personal. Where? Personal what? When you say personal, from him. Because of what? Because of his structure. Matthew owns a barbershop, though. So because he's set up this way, I can sue him above his insurance, provided I can win that way. Now, what if he has no insurance at all? And I sued him for $50,000. And he's set up this way. Who has to pay? Matthew got to pay, right? Same idea. So why? Because you got 100% liability. Now, what if Matthew a challenge with his credit? Credit 422. Can he get a loan? Why? Because his business is tied to him. Now, there's a lot of people out there in business with their business tied to them. What's your name, sir? Jermaine. Say again? Jermaine. Jermaine has 20 barbershops all over the city, make 20 grand a week in rent. Something unfortunate happens to Jermaine. What happens to his business? He's single, unmarried, no kids. It don't matter. Say it again. He has to shut down. What happened to his barbershops? Gone. What happened to all that money? All because of his structure. So you leave school, you get your business, your barber's license, you get your business license, you open up your shop because you have a few dollars in the pocket, and automatically you set up this way. And these are the negatives. And there's a lot of people filing like this because our accounting friends tell them your business is small and this is what you should do. Tell you a real story. A lady out of South Carolina, out of Georgia. I created, let me hold that story for a second. I'm going to hold that story to another time, later on in this class. And when you file that thing, Jermaine, you're going to file that tax on a Schedule C, this form here. Folks, if you don't learn nothing else, as soon as you are able to, as soon as you can afford to, as long as your business is legitimate, I don't care what that business is, if you pick up bottles for a living and that's there to support your family, you don't want to be this. If any accountant breaks out this form, matter of fact, go home and look at your taxes, and if you got this form attached to your tax situation, something is wrong with you and your account. Did I say that wrong? I'm sorry. That came out kind of hard, isn't it? Ain't nothing wrong with you, but somebody should tell you better, because this does not help you. I don't care how big or small. Now, if you're doing something on the side that's not a true business, then this is okay. But if you're really trying to make things happen for yourself and your family, this isn't. Now, a lot of people do this. Have you ever heard of an LLC? You have heard of anybody else? LLC? Everywhere you go, they tell you to do this, right? Get you an LLC. You got a great business. Get you an LLC. You got a great business. Okay? Let me tell you about LLCs. I think they're okay too, but they're not enough. Let me tell you why. What's the catchphrase in LLC? Limited liability, right? Okay? Tell me your name, sir. What's your name in the back? Tyrone. All right. Tyrone. If you own all the shares, if you own the LLC in its entirety, what's the limits to your liability? Exactly. So where's your limit? So if I sue you for $1 and I win, who pays? So tell me, how does this help you? Okay, TV land, internet land. Tell me how this help you. Tyrone said his limited liability, he has all the limits to his liability. If I sue Tyrone for $1 and I win, who has to pay the $1? He has to pay the $1, right? So tell me, how does this help you? Not with Tyrone by himself, right? What's your name, sir? Say again? Donald. Okay, so Donald and Tyrone is in business together, right? They got a barbershop together. I sue you for this, y'all partners, 50-50, 100%, right? 50% partners. I sue you for $1 and I win. How much you pay now? Exactly. So now you have a limit to your liability, right? So tell me how a one-person limited liability helped that one person. Somebody text me, call me. Anybody call me and tell me what's the limits to your liability. Everybody in America talks about this. And nothing wrong with it, though, if you do it right. Now, if me, Tyrone and Donald, myself, a few other people, what's your name, man? Kendrick. That's 4 of us, right? If we get sued for $1, what's our liability? If we lose 25%, now, that's good for us, right? Because that means I'm not at 100%, Tyrone's not at 100%, everybody's paying 25%. That works for a group of folk. Tell me, how does it work for one person? But everybody in America would tell you, get you an LLC and be in business. But remember I said, most LLCs will file on a Schedule C, a Schedule C. Most LLCs file on a Schedule C. What I say about a Schedule C, it has the largest amount of liability. So if you do your tax situation and you filing an LLC and it falls on a Schedule C, you need to check that. Here's what makes the difference. Every client, me and Mr. Jean talked about this earlier. Every client I have, now let me go back one spot. If you're doing real estate and you're doing fix and flips, LLC will work for you because it's only temporary. If you're doing real estate and you're running your real estate as supplemental income, meaning it's not ran as a business, it is supplemental, it's additional income. It's not business income. So you buy a couple of pieces of property, you rent them out for additional income, but you still got your primary gig, whatever that might be, whether it's a job or whether it's a self-employed business or whatever. If you're running all my real estate, those 68 properties, was under my corporation for a reason, and I'm going to tell you why. But if you're doing real estate, that's the only way I see LLCs beneficial, because you're going to buy those properties, fix them out, rent them for a few minutes, and maybe fix them up and then sell them. Because under the corporate process, it's easier to sell an LLC property than it is for an S-corp property. Now, this is where I take all my people. I don't care whether you make $10,000 a year, but you're moving up, or whether you make $10 million a year and you're moving and you're stable. S-corp is the way to go for me and my clients. I'm an S-corp. My wife's corporation is an S-corp. Tyrik is an S-corp. Eric is an S-corp. I work with all those guys. Half of Videoland is an S-corp because I work with a lot of people. And this is why. I call it the one-person corporation. Kendrick can have a corporation. Tyrone can have a corporation. Donald can have a corporation. Ms. Janine can have a corporation. And I don't care how many people is involved with it. Because IRS don't care, because what they see is not individuals, they see EIN numbers, a company, no different than Walmart, Kmart, and Sam's. They see a company EIN. They don't care whether you're $1 million or $100, you are a corporation. You got the right to be just like those other folk, which gives you the right to write off like those other folk. This is how it went for a little person like me. Now, I'm not a very big person from a business standpoint, but I do okay. Greater borrowing potential. Now, Miss Toya talked about credit scores. Now, my credit score right now, today, I checked before I came on stage, was 785. 785. The reason I tell you that, because I ain't scared of it. Now, if it was 534, I'd tell you that too, but then I'd be working on that one. But I'm 785 right now, because as she mentioned, there is nothing in my name but one house and one car. Remember, I had 68 properties at one point, all in my business. Now, if I don't have nothing touching my credit would not be artificially low, it would be higher. So now I have cards, business cards. I got 3 or 4 cars in my yard, and they're good cars too. Tyrone, they're good cars, bro. They good cars, German type. You know what I'm talking about? You know what I'm talking about? Yeah, the big ones. You know what I'm saying? But guess who paid for them? Who paid for my cars? My company pays for my cars. Now I got one tied to the house. Now my wife is 5'1". She weighs about 130 pounds. She drives a little car, but it's German too. None against American. I drive American cars when I do my laundromats. That's another story. But it's the truth though. It's a minivan. Top minivan. A good one though. Town and country. Top of the line. Boy, what are you talking about? Why? Because Ivory Mims Group in 2000 and I'm not finished with 20 yet. 2019 generated $3.1 million. 3.1 million. That stuff I told you about, them houses and the distribution and the laundromats, 3.1 million. Okay. My wife, solo practice, did about 1.9. That's $5 million in the household, y'all. 5 million. Okay. So when I go to the bank, I get what I want. Why? Because everything runs through my business account. My business account, not my personal account, my business account, my business account. Remember now, my business account is separate from my personal account. All my money goes to my business account. All my wife's money goes to her business account. Okay, y'all feel me? Now, under the eyes of the Internal Revenue Service, the S Corp brand pays no taxes. Y'all didn't hear what I just said. Y'all didn't hear what, why anybody jumping and shouting like you're in church? Y'all didn't hear what I just said. The S Corp brand, Internal Revenue Procedure, Internal Revenue Revised Procedure 2013-30, 97-40, I keep on going. They say that as long as your company is registered with the Internal Revenue Service as an S Corp, it's a pass-through entity, and who pays taxes is the money that's transferred over to your personal. Now, question for you all. Who made the money in the company? The company made the money, right? So let's say, I'm gonna go back to, what's your name, sister? Christina. Christina, you're a barber or beautician, or either? Neither? Just in the business, right? Just hanging out with a business person, right? Okay, that makes you part of the business. If your company made the money, if you're in the company, and the company made the money, are you yourself making money too? Okay, it's not a trick question, okay? But the company is really tied, the money is really tied to the company, all right? So now, because of that, you get special taxation because you have bills at the house, right? So this is what my wife and I do. This is a strategy for all of you all. I'm telling you, it works, and if you don't put it in play, it's your fault. That $5 million I told you about is in the company account, right? Now, I have a small mortgage on my primary house. I have no car payments. I have no credit cards. I have business credit cards. But my house runs off of, Janine, you'll appreciate this. My house runs off of $3,800 a month. That's it. $3,800 a month. Mortgage, light, gas, water, groceries. That's all my house pays. Taxes, house taxes. That's all my house pays. So guess what my salary is per month? Y'all too smart. Y'all, so what am I doing with the other money? Why? Say that again, Tyra. Say it loud so the crowd can hear you, man. It is not taxed. Don't you tell me who's winning. Who's winning? Schedule C winning. No. Schedule C? LLC winning? No. Not in the form that it's in. S Corp. Greater borrowing potential. I go to the bank, all my money ran through the bank account, right? So I don't recommend you guys, I see your hand, my man. I don't recommend you guys, I do recommend this. Don't leave your money in your front pocket. Take it to the bank. Take it to the bank. Run it through the bank account. See, most people hide money because they don't want to pay taxes on it. S Corp says, why do that? You ain't got to pay tax anyway. Not on that amount. So put it all in. Why? Track record. Track record. If that banker sees your money going in the account and you go ask for something, all you got to do is, hey, man, look at the money I got through the account. Look at the money I put in my account. And I tell you, too, that $4,000 that's going to my house every month, My wife would take from either account, mine or whole, it don't matter. It don't matter. It's only $4,000, right? If I'm still doing $600,000 a month, doesn't matter. That's not being taxed. Now, of course, out of that money I'm paying, for my vans and my houses and all that kind of stuff. I'm paying, for upkeep. So I'm not keeping $5 million. Don't think that. But if I'm keeping $1 million, I'm good. Am I right, Tyrik? If I'm keeping $1 million tax-free, tax-deferred, am I doing okay? Okay, so let's change. Why are you laughing? But you feel me, though, right? So here's the deal. Let's take the numbers down to something that you can understand, or something that might be more in line. Let's say you're doing $200,000 in your barbershop business, and your bills at home, like gas and water, rent. See, even your daycare, if you got kids, that can be paid through your business, because most businesses have daycare centers on site for the employees. See, remember now, you are now the CEO of your corporation. You're the president of your corporation. Now, you don't own your corporation. You just own all the shares of your corporation. And here's another thing. Remember I said that, I'm sorry, your name slipped me. Matthew. Remember I said Matthew can get sued if somebody come out of his chair? If Matthew was an S corp, Matthew himself can't get sued. Now, they can still sue the barbershop. But what they going to get? A couple of barber chairs and some stations. But they can't touch Matthew's house. They can't touch none of Matthew's money. None of that. Why? Because of the structure. There is no negative here. And special taxation says, I only pay taxes on the money that I take home. And who controls that money? So now, this morning, Ms. Toya said, she said, if I want to buy something different, I pay myself, so $4,000 a month, that's roughly, so my wife really pays herself about $50,000 a year, and I pay myself $17,300, because I get a check for $263 every 2 weeks. Why? I have no idea. Where that number come from? I have no idea. But by law, Uncle Sam says I have to pay myself something. And so that number came out of the blue, $17,300 a year, breaks down to $260 every 2 weeks, okay? So because of that, that's all we pay taxes on. Have I said anything that don't make any sense? Have I said anything that don't make any sense? Now, keep in mind now, it doesn't matter what your zeros look like, as long as your business is legitimate and you register as an S corp. Let's keep on moving on. Under the S corp, under the sole proprietorship, if you lost money 4 out of 5 years, what do they classify your business as? If you lose money 4 out of 5 years under the Schedule C, what do they classify your business as? She said it this morning. It's a hobby. It's a hobby. So you can't lose money 5 years in a row under a sole proprietorship, because they'll take those losses and add them back as income. And now, so for example, you lost $10,000 a year for 4 years. You try to do the same thing for the 5th year. They deny that and say, no, those losses are now income. So now they just put $40,000 back to your income over those years, and now you got to pay a penalty plus the tax on that. Under the S corp brand, you can lose money forever, and they don't care. Why? Because you're a corporation. Corporations can make money, they can lose money, they can move money, they can do all kinds of stuff. And it doesn't matter how many people you are. If you're 3 people, my whole business runs off of 9 people. Everything I just told you about, 9 people. 9. 3 of them on the inside, the rest of them work on the houses. Telling you, come out a winner. No negatives with the S corp. Any questions about this? Go ahead, sir. And I got your question too, brother.
Can you put in existing income like retirement into S corp?
You cannot, sir. It has to be it has to be income earned via self-employment. So no. However, you can hedge against that by having an S corp and strategically lessening your income on the S corp. Now, real estate is one of the best hedges against any kind of income you have, because you can keep losing money on real estate through depreciation and through some other things where you would never have a gain on real estate, but you take a rent money every week and every month, and that can lessen the tax you hit on your retirement money. Any questions on this? You had a question, my man. I'm sorry. Did I get to it?
So you already have an LLC established?
Yeah.
How can you turn it into that?
Yeah, great question, great question. The question for you all in radio land, TV land, or internet land, he said, if you have an LLC already, how can you convert it? There is a conversion tool. We do it for a small fee. Takes about 7 to 10 days. And here's the best thing about it. That same procedure that I quoted earlier, IRS Revised Procedure 2013-30, says if you go from an LLC to an S Corp, not only can you benefit from this year, you can also, if you acted as a corporation, take it back 2 additional years. So let's say that you say, hey, Ivory, man, that thing sounds pretty good to me. I want to get hooked up on that. So I'm going to create your S Corp for the 20 tax year. Let me see, hold on. 20 tax year ain't over yet. So for the 19 tax year, because 20 is not yet due yet. It's due now, but it's not over. So it's not over until October 15th. So you can create the S Corp for 2019, which means if you pay taxes in 19, you recharacterize your business. In 19, you can do it for 18 and 17. So if you had a large payout, or where you made some money in 17, 18, or 19, that recharacterization will probably lessen your tax liability because there's more stuff you can actually write off. I'm going to talk about that here in a second. And you can benefit from that. I do it all the time. And here's how it happens. I had a client. She lives in Fairview Heights, Illinois. She was a hairstylist, made $160 a year, used to always complain about paying about $8,000 to $9,000 a year. I recharacterized her S Corp, took her back from that present year 2 additional years. IRS sent her a check for $32,000 overpayment that she paid because of the recharacterization. I just had a client just 2 months ago. She owed Uncle Sam $80,000, hairstylist. $80,000. She's banking now. She makes some paper. But I recharacterized her LLC to an S Corp. She now owes $4,000. 4. She could have had my next child, but I'm married. She is too. Yes, ma'am. No, you can go from 0. Her question was, do you have to have something established already? No. You can go from a sole proprietor to an S Corp. With nothing in the middle. It's just a little less expensive to do it via LLC because there's only one additional step. From a sole proprietor to an LLC, to an S Corp, it's more steps going from 0 to 100. Okay. Now let's keep on moving. Now you're going to always file that. If you do an S Corp, you're going to file that on a form 1120S. Now let me tell you the kickback we get from this. A lot of times, this is a story I want to tell you. There's a young lady in a small city in Georgia. She was a hairstylist. Her husband was a nurse. I did her work. I converted her from an LLC from a sole proprietor to S Corp. And she got home, and the guy who did her taxes, said that I took advantage of her. So she called me, crying. Hey, this guy, my tax person said, you took my money. I should have never done that. I should have never become an S Corp. Her husband's on the phone in her ear and that kind of stuff. So I said, well, get them all on the phone. Let's talk to them. So she called the husband up, and she called the tax preparer up. So I said, okay, Mr. Tax Preparer, because I'm really dumbfounded as to why she was crying, that kind of stuff. I said, okay, tell me what I did wrong, because I'm willing to give her money back if I did something wrong. So the tax preparer gets on the line, and he said, hey, man, look. He said, you did the girl a disservice, man, because this girl, she just started her business. This is why she's been in business 2 years. She just started her business, and she ain't big enough. I said, okay. She's been in business 2 years. So I said, well, man, how many years you been in business? He been in business 3 years. Mind the story now. I said, okay, you've been in business 3 years. She's been in 2. I don't see much of a difference here. I'm thinking this to myself. I didn't broadcast this. He said, well, I said, well, that's not really that big of a deal. He said, well, she don't have that many clientele. That much clientele to do this S Corp because it costs like $800. I said, well, man, when you started your business, how many clients did you have starting at the gate? Well, his response, well, you got a bill. I said, well, so does she. He said, well, man, she don't own her building. She shouldn't be no S Corp. I said, are you buying, renting, or leasing? I'm leasing. Okay, well, she renting a space. To me, same thing. Same thing. This is the last straw, and this is what pissed me off. Sorry. Excuse me, y'all. Mom, I'm sorry. He said, well, man, the reason you shouldn't, because she's just a hairstylist. That got me. That got me. I said, okay, so she's just a hairstylist. I said, this girl makes just as much money as you do. I said, by the way, what's your structure? Well, I'm an escort. So I said, everything you say she couldn't be, you are, and she's equal to you as far as business structure. Why couldn't she be what you are? Because she's just a hairstylist. See, he didn't appreciate her business. That's what it was. So, what I want to say to you about that is this. Most accounts, when you do this, going to kick back on you not because it's the wrong structure. They're going to kick back on you because they don't know how to do it. Ain't got nothing to do with you and your business. They don't know how to do it. Now, is it more work for you? No. More work for me? Yes. But no more work for you. You keep running your business the exact same way. You go to your barbershop, your beauty shop, your nursing home, your daycare center, and you run your books the exact same way. Come tax time is when things are different because now you got 4 tax returns opposed to 2. That's the only difference. But that's my work, not yours. You pay a little bit more for it, but I guarantee you, if I can save you $30,000 or $40,000 a year, that $300-400 more you're paying in tax it's not a big deal. Y'all feel me? That's why I say it's a benefit. Let me move on. Here's how it looks on paper. Schedule C, S Corp. Schedule C, S Corp. This is your traditional Schedule C. You got $25,000 worth of expenses behind the chair, daycare center. Worth of income, I'm sorry. Your expenses, light, gas, and water at the shop or business or what have you. Your taxable income, $25,000. Here's your consequence based on 15%. Right? All you decided to do in between is it Lano? Lauro. In between, Laura, you decided, hey, Ivory, I want to do this S-Corp thing, man. It sounds pretty good to me. Same year. This already been done for you. Done in February, March. You met me in August. I heard about this, man. I want to change this. Same year. $50,000. Same $50,000, right? Same expenses, right? This time, you're going to recharacterize the money you already took home. You've already taken this money home. You paid your bills. You paid light, gas, and water at the house. We're going to recharacterize it not as taxable income, but as your payroll, owner's draw, K-1 distribution. Because of the terminology from an sole proprietorship to an S-Corp, because of the terminology, your company that stands by itself now, your company stands by itself. Remember, under the LLC and the sole proprietorship is you doing business. Under the S-Corp, whether you in the business or not, it still operates on its own. Ivory Mims Group will operate whether I'm there or not. Tyrik Jackson International operates whether Tyrik, because you can sell that company and it still exists. You feel me? But over here, you couldn't do that. Remember, because he had the 20 salons. If something happened to him, everything shut down, right? Over here, if he incorporated as an S-Corp, those 20 salons can keep on going and keep paying his family, his girlfriend, his wife. I said that right? Y'all know what I'm saying. I hope you ain't got that going on, bro. But look, over here, Leroy, I'm going to get that right in a minute, bro. I'm a country boy, so I can't, You paid into the system now via estimated taxes, because you got to pay something. But who controlling the taxes now? Who controls the taxes? We control the taxes. We control how much we pay. Because you paid it in, and you paid it in via estimated taxes, Uncle Sam's going to bless you and give you some money back in a refund based on the scenario of about $1,250. Why? Because when you pay your taxes early by law, Uncle Sam have to pay you interest on it. See, money is not moved to the Treasury until sometime in February. It's collected all year long at the Internal Revenue Service. And they move it in February. Why they move it in February? I have no idea. But they move it in February. So they collect your money. So people with jobs. So you got a boyfriend, girlfriend, right? They make $30,000 a year. They work a job. You make $30,000 a year. You self-employed. You got 2.3 kids. They got 2.3 kids. They get $8,000 refund. You get back $3,000. Why? Because every pay period, their HR pulled their money out and sent it in. You decide to pay at the end of the year. You don't get those credits. They did. They get a big check. You get a little check. You did the same thing they did via this program. You get the same check. Does that make sense to you? Have I lost anybody? Okay, let's keep on moving. Here's another thing, Leroy, you might like this one. If your company has a net profit less than $50,000, what's a net profit? After all your bills are paid, and you have less than 50, you pay no more tax at all. If it's over 50, you pay about 6%. But here's the deal. You control that number. You control that number. Let me move on one more time. Here's a better look. $75,000, advertising, rent, supplies. This is Schedule C. This is Schedule C. Schedule C. Rent, advertising, all that. Total expenses, net income. This is what's left over right there, okay? $57,000. Here's your tax based on that $57,000. You call me again because your money got bigger the next year because you didn't do it the year prior. LaRoe, same $75,000. You said, I'm going to do it this time. I'm really going to do it this time. Is he really going to help me? So in between the year, we converted his Schedule C to an S Corp, and his bills are still the same, but he took $30,000 home. Now, how do I know he took $30,000 home? Because I'm going to ask him, what's your mortgage or your rent, your light, gas, and water, food for the kids, and whatever payments you got at the house? Man, I take home about $750 a week. Okay, $750 a week is roughly, I don't know, what's that? $750 a week, that's $750 a week, that's $3,000, that's $40,000 a year, right? So that would go in this area here. Now, he didn't pay in early, so he get no credits. However, because he recharacterized it, it reduced his taxable income. Under 50, so there's no tax on the corporation anyway, but he's paying tax on this number and not on that number. Who controls this number? Thank you. So now what if LaRoe's, I don't know if she's married or single, but what if LaRoe's significant other make enough money to cover all the bills? Does he have to take a salary at all? Not a big one. That's the same thing happened in my house. Don't have to, so you pay yourself what you want to pay yourself, and legally and live above board. Any questions about this process? Any questions? Have I lost anybody? Now notice the difference. Notice the difference. Schedule C, you owe $17,000. Subchapter S, on the same exact tax return. These numbers have already been processed by somebody. The IRS already got these numbers. Ivory, straighten me out. I paid too much. All I'm going to do is recharacterize you, do the paperwork, send it in, and amend your taxes. Now you paid in $17,000, but you really only owed $4,000. How much money are they giving you back? $12,000, $13,000, right? Simple math. Simple math. 35 years I've been doing this. 35. I know I look good. Go, you got to say it. You got to say it, y'all.
Where do you live? Are you here?
I'm in Missouri. I travel all over, though. Don't matter. $4,000. I'm almost done. Here's the process. Any questions up to this point? Have I lost anybody? Have I lost anybody? Everybody's good. So we're not doing no more Schedule Cs. We're not doing no more LLCs with no designation. We're doing S Corps. So when you leave school, get your business, you need to find somebody who's going to do this for you. If they don't understand it, call Kansas City and I'll hook you up. Okay? Here's the process. You find your business name. I'll do everything else. I'll get your tax ID number. I'll create your articles. I'll help you become an employee of your own company, because that'll happen automatically. But now you decide on how you want to pay yourself. You can pay yourself several different ways. K-1 distribution, owner's draw, or you can pay yourself wages. Now, if you decide to pay yourself wages, you should only do that with a strategy in mind. Wages via W-2. You can have what is called a self-directed payroll, which basically means you control the payroll process. You don't have to do a third party outside, but you have to get somebody that understands payroll. You create the W-2s for yourself. You pay in every quarter like a regular HR would be, and then at that point, you can create unemployment. So here's the thing. For those of you who are still married, single, or trying to have some babies, you put yourself on, so for example, me and my wife are just a little bit too old to be having some babies right now, but let's say we decided. We're going to say we're going to have some babies this year, 2021, and we're both owner's draw. We pay our money for estimated taxes. But we're going to have a child. So we're going to get pregnant in January, February. So I'm going to switch my wife's payroll from an owner's draw to self-directed payroll and pay her a W-2 based on the same amount of money. Now, we're going to pay a little bit more in taxes, which is understood. So 8 months later, we're going to have our baby. What do you think going to happen to the wife during her last quarter in some cases? What happens to most women? They stop working. Now, under the present system, there's no unemployment, right? But because I created the W-2 system, I lay my wife off, and we keep a check rolling. Have I done anything illegal? Have I done anything illegal? If you out there in TV land or internet land can figure out I did something illegal, hit me up. Because I guarantee you it'll work for every one of you in here, okay? So you become an employee, and that's how it works. Now, one other thing, too. Once you become an S Corp, everything you've done up to the day you become an S Corp is an investment in the S Corp. The Internal Revenue Service says that every dime you spent building your business up to the day you became an S Corp, the next day you become one, that's an investment in your business. So Matthew, you spent $30,000 getting all your stuff together. You might be in a shop, bought supplies and traveled. You got schooling, you got all kinds of stuff going on. But now you say, I want to be an S Corp tomorrow, but you're already in your shop, right? But you have spent $30,000 trying to get there, $40,000 trying to get there. That's an investment in the S Corp, because what you was doing before wasn't a traditional business. Today it is. Okay? I got you, brother. Today it's a business. So that $40,000, Uncle Sam says, pay yourself traditionally, but pay yourself the same salary. So you decided this particular person was paying himself $45,000 a year. But now, with the return on investment, notice the difference. You see the difference in the income? You see the difference in the taxes? See if I can find this on here. Take it back one. You see the difference? I'm going to go back to the other one. You see the difference? You see the difference? It's the same numbers, aren't they? Look at the numbers. What you see here? I'm going to go back to the other one. You see the difference? Look at the numbers. Are they the same? Are they different? Let me go back one more time. They look different. They look different, but they're the same. What's this income? 1750.67, right? What's this income? 1750.67, right? Same income. So I paid myself the same money, right? This is the traditional. This is the pay stub after the S Corp. This is the pay stub before the S Corp. 1750. What's the difference? Taxes, right? Why? Because I own the S Corp. I own the S Corp. Shareholders of the corporation who controls the pay don't have to pay income tax until such tax is due. Now, who controls the income? So therefore, who controls the tax? So if I pay myself sporadically or not at all till sometime later in the, I don't have to pay an income until an income tax is due. So therefore, under this program, I'm getting my return on investment, that $40,000 that Matthew talked about, but I'm still paying myself the same salary. It's just that return on investment is not taxed. So Uncle Sam says I can keep that money back as I can get that money back non-taxable until that $40,000 goes away. So I'm not paying taxes on this amount. I'll be paying payroll taxes on this amount, and because I control my payroll, I pay no income tax until there's a tax due. Now, I control my income, so therefore, I'm going to ensure that there's no tax that's due. Did I say anything that don't make any sense to you? Have I lost anybody? Every person in here has a right to do the exact same thing. Now, there's nothing that I'm saying that's a secret. There's nothing that I'm saying that's hidden. There's nothing that I'm saying that folk, the reason people aren't doing it is because people don't know about it. Now, when I say people, folk that know about it are folk that got folk like me on their team that's telling them not to do it. Nobody with money gets paid wages. You control your income. Wages aren't the worst thing in the world, but from a tax standpoint, from a wealth building standpoint, it's not the best thing in the world, because wages are taxed first. Every one of you that with a job, when you get your $1,000 a week in pay, how much you taking home? $892 or something like that. Those are wages. They get theirs before you get yours. But those that work in the barbershop, part-time and illegally, how much? How much money you take home at the end of the week? All of it first, right? And then you pay them what you're supposed, if you pay them at all. My thing is, stop living under the radar and live above the radar. This process gives you the right. So people come to me. Now, I know who Pookie is. I know who Pookie is. Pookie's a tax man on the corner that just be hooking y'all up. Y'all just show up. He just show up every year, get the maximum earned income credit. I know how to do all that stuff too. But there's a legal way of doing all that stuff. You ain't got to be illegal anymore. And that's part of the problem we have in America right now. That's why the tax code is kind of upside down. But it's always, it caters to those that have. Now, I want you to think about this situation. The average barber beautician, what do you think the average weekly income is for a barber beautician? Give me a good guess. Come on, throw a number out. Weekly. You can do about monthly. 12 to 1,500 a week, average barber, right? That's roughly, what, 6,000 a month, 6,000 a month, $80,000 a year, 80 grand a year. Now, I went to school for 17 years. Now, I never had a job, though. I just went to school. I got a lot of education for no reason. My wife went to school and actually practicing what she does every day. Now, my accounting took over, but I went to school to be a banker. Never worked at a bank, never desired to work at a bank, because I know all bankers are broke. All bankers are broke. Every last one I met is broke. You deal with all that money, you got no money yourself. I don't understand that. Ask any banker, unless they're a loan officer. But my wife, when we got married 20 years ago, she came into the business, right? And she said, we were sitting there having a class like this, and the average hairstylist at the time was making $1,000 a week. My wife's first year out of law school, she made $35,000. First year. And your first year out of beauty school, you're making almost 40. Come on now, think about that. She went to school for 17 years. You went to school for a year and a half. You guys are making executive level salaries. The problem is you don't know what to do with it. It's all in your front pocket. So get a structure, a system together. Now, mind you, you're talking to a dude who never had a job. Yes, I did. I worked at Popeye's Fried Chicken when I was 13, 14. I did have a job. I did a little military time, too, But I never had a traditional job. Never had a traditional job. But now today, I can go where I want to go, do what I want to do, at the level I want to do it. And I don't care what y'all say. I just met y'all. Ain't nothing y'all did to help me with my millions today. Now tomorrow you can, because I got a book up here for you to purchase. But my point to you is this. I ain't got a reason to lie to y'all about nothing. Because y'all don't owe me nothing, and I don't owe you nothing. And the point is, get some education in your head so you too can do the exact same thing, if not better. Now, I had challenges. I was a brother from the South with no opportunities. And look at me now. Y'all can do the same thing. Y'all can do the exact same thing. And this my nail tech stuff took me places. You got the same opportunity. So don't let people tell you just because you are a barber, just because you're a stylist. That just the stuff don't matter. Do the things right. Do it right. I promise you, it'll come your way. I'm almost finished. Any questions? Any questions about what I've said? Yes, sir. I'm sorry. Go ahead, Donald. Is it Donald, right?
Yes, sir.
Uh-huh.
You said it's the S corp from LLC.
Mm-hmm.
And if they do it, they take everything that you have as an LLC and
Right.
look at it as an investment.
Mm-hmm.
But you would have to have like all the receipts.
No, you don't. No, you don't. They have what is called a pattern of expense. A pattern of expense. Here's what happens. Let's say you've been kind of Schedule C for 5-6 years in this area. Every barber or stylist has a pattern, and the IRS knows this. So if you've been in business for 5, 6, 7 years, you're in the booth, there's a pattern that you'll fall under. So folk with 5 years in this area will be making a certain amount of money, and the IRS knows that, okay? So I'll use that pattern. To put together your tax return, okay? So you don't have to have every receipt, and even now, you don't have to have every receipt. Now, I heard some good stuff this morning and about how to budget and stuff like that. Here's my simple way of doing it. My simple way. Janine, you might like this one. Laurel, I'm going to get that right one day. I'll put everything on a credit card and pay it out once a month. See, I don't have the time to keep up with every receipt. Now, I separate my personal from my business. I don't carry a house account. I don't carry a house credit card. I don't carry a house checkbook. This is the man side of me now. I don't do none of that. Not that my wife is domestically, because she's not. I'm kind of different when it comes to a husband-wife thing, because my wife works every day too, so I don't require that she do anything. She don't have to cook, she ain't got to clean. I got money. You understand what I'm saying? So I can do some of that stuff, but she enjoys doing that kind of stuff. But my point to you is this. When it comes to keeping up with my business, I put everything on a card and pay the card off 90% at the end of the month. Now, why 90%? Because it keeps my credit open and it keeps the bankers happy. So if I need to get a credit increase on one of my cards, I just call them, hey, I need a credit increase. They see I'm paying a little interest that I'm controlling, and they'll give me what I want. So now, when I go to file my own personal taxes, what am I going to do? All I have to do is produce a bank statement. Exactly. I mean, everything. Car payment, if they take it on a credit card, rent payments or mortgage payments to the credit card companies, they'll take it on a credit card. Everything. Everything. Now, if it's not a business expense, then it's cash. I get my sandwich at McDonald's, which I shouldn't be eating, $5 cash. Yes, sir.
I'm an entrepreneur in business. Been in business for like 20-something years.
Mm-hmm.
Been in one salon for 11 years.
Mm-hmm.
Actually, I've been there recruiting
Okay.
barbers and stylists. But I like what I hear. I really do.
Thank you, sir.
And I'm glad I just stepped in because I just stepped up there on, 12 o'clock.
Well, glad to have you. Yes, sir. Thank you for being here.
After's all I want to talk to.
Yes, sir. No problem. No problem. Talking costs you $200 an hour. I'm just kidding. I'm just kidding. I saw this. I saw this. You can have a book now, though. Go ahead, sweetie. I saw your hand, and I got you over here. Oh.
Quick question. So if I want to do real estate, but I also have catering business.
Mm-hmm.
Do I have to have two separate experts, or can I?
Great question, and I'm gonna answer it just like this. A lot of people would tell you that for every business to have a different bank account. I don't do that. Remember, I'm a country boy from Georgia. This is how I do it. Now, I told you I had those 3 businesses. All that money flow into one account, and I do it for accounting purposes and bookkeeping purposes only. I ain't got to chase no money. I know where it's at. And if I have to pay a bill, I'm going to pay it from where? That one account. Now, for bookkeeping purposes, I can have business A, business B, business C, but all my money is in one place. It doesn't make any sense to be moving money around to cover bills. That's idiotic to me. If you got to move the money, close the account and just work out of one, especially if they're all businesses. If you own all the businesses outright, you don't have to share that money with nobody but your family or your husband or wife, then there's no benefit to having all these business accounts. Why? Some of them cost you money. You can't manage them properly. You got three business accounts. One got $2 in it, one got $18, one got $339 in it. Just combine them all. Yeah. So, no, don't have all them accounts. Now, if they get big enough to where they can take care of themselves, then separate them. Now, in some cases, if they are 2 totally separate businesses, real estate, that's doing okay, and catering. Okay, one's food, one's real estate. Once they get strong enough, I would definitely separate them at the time they get strong enough. But prior to that, keep it together, keep all your money in one place. It makes life a whole lot simpler because you only have to make 1 deposit a week. Remember now, when I take my pay from my wife, she writes a check from the business account to the house account. She goes to the bank 1 time a week and dump all that money in, and she draws her money on that same Saturday. She write that check and deposit it to the house account. So now let me tell you what happens with that. All that activity ain't necessary in my business account or personal account. There's no activity but around the 15th and the 1st. That's the time we pay our bills. But we're dumping money in it every week, credit cards, rents, her checks from her business, all that stuff going in during the month. During the 2nd through the 14th, money is going in. Money's coming out on the 15th or 16th. Now, I have a problem with my money dropping. I hate looking at a bank account and it's less than what it was the month before. So I'll look at it on the 3rd, or I'll look at it on the 18th. All the activity is gone, but I still have all that money going in. That way, I'm not worried. And since I've already moved my house money, my house money from the business account, I ain't got my house bills not being paid. because I want to make sure there's enough in there to cover the house expenses. And most of us know what our house bills are. They're the same every month, unless something happens, but they're the same every month. So you move that money. Now, a lot of times we like to get paid once a week. So if that's the case, you dump your money in the account on Monday, especially for those of us who can't get to the bank on the weekend. Dump it on Monday, and you draw your money. You have your bank do an automatic transfer from your business to your personal on that Monday. And add enough for your mad money. ATMs are robbing y'all blind. I don't even have an ATM card. If I did, I don't know what the PIN number is, because I don't care. I don't care. Everything I do is either cash, but that cash is stuff that's not deductible. But everything I do on business. Question? Mm-hmm.
Somebody says, can you get an S corp if you're an employee for the company?
Okay, great question. I'll answer that. Did I finish your question? Okay. If you are a statutory employee, if you work for someone, let's say that you work for an insurance company, and that insurance company have you on salary. They pay you $50,000 a year to do insurance. However, you also have to do some traveling with the insurance company, and they don't cover your expenses for your traveling with the insurance company. You got out of town, you got a cell phone, and the insurance company is not traveling. That's called a statutory employee, which basically means you can file a Schedule C if you need to cover those other expenses. If those other expenses are substantial enough, you can create a corporation for that purpose and benefit from an S corp. So I hope that answers your question. I saw some hands over here. Yes, Mr. Janine.
So, if you're, okay, I guess I got a couple questions. So, if you are LLC and you're keeping it separate, say you have a revenue account, right, and you have a personal account. If you're paying yourself from the revenue account, could that act as payroll?
It is payroll. No.
And you don't have to be with like 80.
No, ma'am. Great question. Even if you don't have nothing as structured as that, if you are drawing money, and this is really how simple me and my wife is. All the money goes into the business account. Once a month, she writes a check from the business to the personal. At the end of the year, that's totaled up, and we do a 1099-G to recognize that income. I'm sorry, 1099 miscellaneous to recognize that income, send to the Internal Revenue Service. That's our legitimate payroll. That's it. You don't have to have no third-party corporation. That's because there's no taxes coming out of that. We send out taxes via estimated taxes every quarter. That's how we pay our taxes.
So what's the difference between a Schedule C and a Schedule K?
Okay, great question. Schedule C is if you are a sole proprietor, and that's the income, so you operating your business as an extension of you. A Schedule K1 is a shareholder's profit or loss from the S corp. So, for example, let's say you and Laura are in business together. The company made $100,000. It paid each one of you $25,000, and there's $50,000 worth of expense, but $25,000 worth of profit at the end. You with me? Are you following me? So you are shareholders in the corporation, 50-50. Y'all with it? It paid them $25 each. That's $50,000. That's $50,000. You had $25 worth of expenses, so that takes the income. That takes the income down to $25 that's left over. You with me? Okay, that $25 that's left over, we split $12.50 a piece, or $12.5 a piece to each you and Laurel as K1 distribution for being shareholders in that corporation. But you are shareholders, not owners. Shareholders, not owners. No different if you was a shareholder in Walmart or Kmart, they will spit you out, a dividend check, not a K1. It'd be almost the same thing. Okay, it's your ownership share of the corporate profits. Now, you don't have to take that much. You can move that money forward and not pay taxes on it via organization expenses. It's all kind of ways of doing that. Any other questions? Go ahead, sir.
How much is it for S corp?
It's a great question, and I'm not going to do that live, so talk to me after about it, because it differs per state, per city. I'll say this, though. With me, it's no more than $800, no matter what state you're in. It's less than $800 no matter what state, and that's a one-shot deal.
So Pennsylvania.
See, now you want me to be specific. I just told you I wasn't. Okay, well, hold on. Okay, TV land, internet land, he's badgering me. Somebody come get him. Go ahead, Laura. I got you, sir. I'll take care of you.
Can you clarify being an LLC, business status, but then you want to file S corp? You don't necessarily have to change your company to an S corp.
No. Okay, that's a great point. An LLC is a state function only. It's a state function only. In some states, LLCs are not required to pay annual filing fees, so some people would do that from a state standpoint, okay, from a state standpoint. But most people set up LLCs because of the title, limited liability. Once you become an S Corp, the S Corp just superimposes over the LLC. So if your name is Laurel Enterprises LLC in, what state you're in? You're in Maryland. Laurel Enterprises LLC in Maryland, on the state website, it's still going to be Laurel Enterprises LLC. From the Fed standpoint, it's going to be Laurel Enterprises LLC subchapter S designation. So you get to file differently. And that's where the win comes in. It doesn't come in on the name. The name don't really matter. It comes in the filing, how you file the taxes. So just becoming an S Corp isn't enough, folks. You got to get those taxes filed properly. And that's where most people fall down. And two, it's an educational thing too. A lot of people will get the S Corp and think that's all. It's all for you of how you run your business. But your accountant has to understand the S Corp process in order for it to benefit you. That's why all this stuff comes into play. Okay? I'm going to get to this piece here in a second. I'm going to run through this real quick. When we do estimated taxes, we do it traditionally where we take the amount of money that you say you're going to pay yourself, that's $60,000 a year, that's me and my wife are paying ourselves, and we break that down and we pay the taxes on that money every quarter. Now here's some I like what Mrs. Toya called it. She called it jewels. Here's a jewel for you. What is the highest income that you can make in America taxed for Social Security purposes? Anybody know? Give me a good guess. 128 right now. It may be just a little bit, 128,000. Here's a benefit of some of us under the S Corp brand to benefit from, now, you know, Social Security, Medicare may not be there when we get there, but still, if it's there, you want the highest amount. And this is how we, as self-employed people, can really make this thing work. So IRS lists it because you can't do nothing about it. In order to say you have earned $128,000, you have to pay the taxes equivalent to about $9,000 or $10,000 a year. The taxes equivalent to $9,000 or $10,000 a year. See, income isn't income until you tell somebody about it. You feel me? So here's how it works. Uncle Sam don't care that I didn't pay myself $128. All they care about is that they got the taxes equivalent to $128. So Laurel, in order to tell Uncle Sam that I made $128,000 a year, how much tax do I have to pay? $9,000, $10,000, right? So if I paid them $9,000 or $10,000 using this formula, what have I told them? That I made $128,000. Now, did I take $128,000? I did not take $128,000. I did not take it. But I can, on paper I did, because I told them I took it. All they want is the tax. They don't want the money. They want the tax. Have I lost you? I lost you? Yes, I did. No, I didn't. You got me. So what am I saying, folks? If I want to say I pay myself $1 million, the tax on $1 million is about 63%. So that means I have to pay him $630,000 to say I made $1 million. So if I paid $630,000, I made $1 million. Y'all feel me? Have I lost anybody? Now, we're not that big yet. However, you can say, hey, look, I want to say the highest, I want to get $3,000 a month, $4,000 a month in Social Security when I retire at 62, 63. So around 59, 60, 61, 62, 63, I need to send them $7,000 or $8,000 a year. I don't care how much I get paid. Did I lose something? I'm sorry. If I send them $7,000 or $8,000 a year via estimated taxes, it told Uncle Sam that I made $60,000, $70,000, $80,000 that year. Did I make that kind of money? It don't matter. Have I lost you? I done lost somebody. I done lost somebody. I had to lose somebody. Do y'all understand what I'm saying? Look, you can't do this with a job. You don't have to be, you cannot do, you can only do this if you control your income. Everybody in here control their income on this business. On this business. So now by the time how old are you, sir? 24. So by the time you're 45, can you imagine sitting on $540,000 worth of tax-free income or tax-deferred income, all because you saved because of your structure? Man, I'm telling you, it's amazing. It's amazing to be a country boy and you seeing how you can make $600,000, $700,000 a month and give them literally nothing legally. And I'm not even a drug dealer. Can you imagine? Oh, you're a drug dealer? Okay, I'm sorry. Any questions? I'm moving on. So estimated taxes, how you want to go? Estimated taxes. What's my next one? Fresh Start program. If you owe some money to Uncle Sam, there's a way to get out of it. If you owe some money to Uncle Sam, we'll talk about that another time. But I'm gonna move to this real quick. Here's how you can win. If you heard nothing else I said, nothing else that I've said. This caption here. This is my little book. I wrote this book back in 1986. I've upgraded it since then. It don't look like much, but I guarantee you, it'll save you $12,000 a year on average. On average, and it costs you about a ham sandwich. There's a section in here for all my business people called deductible expenses. We're going to talk about that right now. This right here, if you don't ever have to do any business with me, ever. Take this to your accountant. If he don't follow it, you fire him and find you somebody else. I promise you, this will change your life. If you're savvy, you can do it yourself. Take these, I'm gonna walk through these. I need somebody who got a calculator. You got a calculator with you? Somebody bring out a calculator for me. Ken, you want to do this for me? No, stay where you at, bro. Stay where you at. I need to add some stuff up for me. Just add some stuff up for me. This is what makes me just a little different from some of your accountants. Because I live your life. I live it. This is in my book. Yeah, everything I've said, other than my sorry jokes in the book. But it might be one of them jokes in there. One of them might be in there. But yeah, it's in the book. This piece is in the book. I live your life because I have a distribution business through my beauty supply store. And every Friday, sometimes Saturday, I will hit the shops just to see people like you all, delivering products and all that kind of stuff. I'm in it. I'm in it deep. So I read what you guys have got going on. So when I do my accounting and bookkeeping, oh, my arm is hurting. When I do my accounting and bookkeeping, I do it based on what I see in the shops every day. And this is how I look at it. So Kenji, I want you to follow these numbers for me. I want y'all to help me out with this. So TV land, internet land, y'all follow this too. I did this program based on a Schedule C, which is the profit and loss for sole proprietor, because I knew there's a lot of people out there operating that way. And I think, of course, that's the wrong way to operate, but most people taxes are lined up this way. So I lined this program up with that. When I think of your business and what can be written off, I think of it the way that you see it. When I do advertising, this is on line 8 on the Schedule C. Most people think of radio, print, television. I don't think of it that way. I think of first lady, best girlfriend or boyfriend, people like that. I'll tell you why. When your buddy comes in and get his hair cut, Matthew, on a day that you're supposed to be slow and don't pay you, but he's your boss, so you let him go, what do you do with the extra $25? That he didn't pay you? What you do with it? Nothing. He didn't give it to you. You can't write it down nowhere. Nothing, right? Okay? But what does your boy tell you? What does your boy do for you? He tell everybody, but you're the best barber in the world, right? So when people talk about your business, what is that called? Word of mouth. That is an acceptable form of advertising with the Internal Revenue Service. So every time you do a reduced service or a free service for a friend or family member, you write in your book or your what you call that thing that we're doing now, your electronic thing, you write down that $25 and you put right next to it what? WOM, word of mouth advertising, exactly. Now think about this. How many times a week that may have happened in your salon or barbershop? Let's say 2 or 3 times. Let's round the number off. Round the number off, because what I'm gonna do is I'm gonna show you how simple 1 or 2 things would do to increase your deductible expenses. So Kendrick, I want you to put down, let's say we did it half. So we did 2 people, $25 advertising for the year. That's 50, that's $1,200, that's $2,500. Put down $2,500 just for advertising. Things that we fail to do. You had a question?
We definitely have an internet question. So the question
Okay.
comes from Crimson Cuts.
Okay.
Crimson Cuts, coming from internet land. So are you able to roll your life into an LLC with an S Corp chapter? That's the way it was asked. I'll repeat it.
Yeah, rephrase it.
Coming from internet land.
Mm-hmm.
So you're able to roll your life into an LLC with S chapter.
Yeah, okay. So basically they're saying that can you take an LLC and move it to S Corp? I think that's what it's meant. We talked about it already, but yes, you can. You can take your LLC to an S Corp without any issues. Okay, without any issues, you can do that. Okay, so $2,500 for advertising. That's how I think about it. Secondly, based on a Schedule C, you can write off your car, your truck. Now, on a Schedule C, you might be limited to just mileage. But once you become an S Corp, think about this, you all. Once you become an S Corp, you title that car to your business, and you write the entire car off. Now, the question always comes up, what if I already have a car payment and it's not in my name? Change the check. If you used to pay it from your house, now pay it from your business, and you can still write the entire car off. Okay? So let's say we have a small car, Kendrick, and put down $5,000 for the year. Another question?
We do, from C. Carlos _. So can you pay all your personal bills through your business account and use it as a business expense, or does it get taxed since it's not a company expense?
Great question, internet land, but the answer is no, you cannot. So here's what you do. You take all your money, as I said earlier, put it in your business account, and you transfer the money from your business to your personal to pay your personal, so you have 2 separate accounts. Now, what you want to do is listen to the rest of this presentation, because some of those expenses that are now personal could be business. Okay, we're going to move some of that around. See, the reason I have a small household income is because I don't have credit card expenses. I don't have car payments. I don't have car insurance through my house. All that stuff is tied to my business. We're going to keep talking about that. Okay, so you're going to write the entire car off on your corporation. Commission and fees. So if you pay somebody, or for example, let's say you're in a shop and you have to pay back part of your income to the shop owner. That's a commission or fee. You can put that in there. So put down for the year, put down $1,000 for the year. I know these numbers are artificially low. If you have an apprentice or a shampoo person or an assistant, you can put that person down. We pay them $2,000 a year, okay? Depletion, the using up of chemicals, minerals, or timber. Now, all these things can be used, all these deductions can be written off in your business as of today. Now, the one that works for us primarily is chemicals. So we use shampoo, we use conditioners, we use relaxers, and some of us in our business, we use perm kits and that kind of stuff. Excuse me. So depreciation, anything with a useful life over 1 year, shears, clippers, stove, stands, anything with a useful life over 1 year. Now, how much do you think it takes the average barber to get started with just tools? The average, just tools. Give me a good guess. $2,500 for everything, about $2,500 for everything. So let's say you just got started. So give me half that number, Kendra. Give me half that number. Give me $1,250. Employee benefits. You like my suit? Matthew, my suit pretty cool. Pretty cool. It's an old suit though, Matthew, but it's cool. Guess who paid for it? Thank you. Thank you. I'm an employee of my company, right? Can my company buy me a suit? Can Miss Jeanine company buy her that nice skirt she got on? Okay, company can do that. Employee benefit, right? So put down $500 for employee benefit for me there, Brother Kendrick. My thing is your company can take care of you, okay? Insurance. All of your insurance is tied to your business or deductible to include your life insurance now. Why? Because you are the president of your corporation, right? If you are not there, could your company keep making the same money it was making before? Nope. If you're not there, no. It can keep going, but it won't make the same amount of money because you're probably the biggest producer, right? So if something happens to you, you are the key person in your business. Key person life insurance is deductible, okay? All right, so give me $1,000 a year. Now, these numbers are artificially low. Y'all know that these numbers are low, right? But I'm doing it for a reason, because if you put down real expenses, these numbers can balloon and you can see your deductions. Take one credit card, earmark it to your business. One credit card, earmark it to your business, and everything you purchase with that credit card plus the interest off that credit card is now deductible, okay?
Good question.
Yes, go ahead, sir.
So, book club, people they keep asking about the book.
Yes, yes.
Tell them where they can find the book.
I have to send it to them, Tyrik. They can get it through you. Just tell them to hit you up, and they can send the book to you. They can send a link, not a link. They can tell you that they want it with the address. We'll mail the book to them, and they'll have to cash out me they have to cash out me the $25. The book is $25. $25.
People asking about the book, but I have another question. If I own two separate LLCs, can I roll them into one corporation?
Yes, you can. You can do that. Just that simple. You can. And no need to go no deeper than that. But the answer is yes.
And you have a couple more people, and then I'm done with this next question. Buffalo Joe says, can I even hire you to work for me in Dallas?
Yes, you can. Now, I travel 33 states, and Buffalo Joe, I will come to Dallas. Just make sure you have some good barbecue chicken for me, and or some ribs, and we'll be able to work something out. But there's a fee for that. But it's not that expensive, Barbecue Joe, whatever his name, Buffalo Joe. I'm thinking about barbecue, y'all. So it's not that expensive to get me in Dallas. It's not that expensive to get me in Dallas. So keep sending your text to Tyrik, and we'll get you information. Yes, sir. Go ahead.
Do you have any books available?
Yes, sir. I got like 20. I think I brought 20 books today. So, and I expect all of them to go. Books are $25. If it don't change your life, now let me tell you this too. I'm not strong-arming you to get this information. So don't think if you ain't got the money, don't worry about it. I mean, I'm saying you won't get the book either. But my point to you is, y'all gonna leave here and go spend $25 on your lunch or your dinner. You know that. So now, and I'll say this is not being arrogant, but the information is good. So TV Land or whoever you're out there, when I do the trade shows, I sell the book for $75. And they eat them up. They eat them up. Because of the information. It's not a pretty book. I don't propose it to be pretty. I'm not a pretty guy. I don't propose myself to be pretty. But you're not buying the looks of the book. You're buying the content. You're not buying my looks. You're buying what's in my head. So you sure can. There you go, right there, man. There you go. He's passing me money on TV. IRS, you don't see this because I ain't gonna claim this one. I'm just kidding. But let's keep on going. Where am I? Okay. So again, we're in the beauty and barber supply industry, right? So what industry are we talking about? The beauty business, right? So whatever it takes for you to keep yourself looking good for your clients, you can write that off. You can write off your hair, your barber. If you get your nails done, you massage therapist. Because remember now, you have to look the part as well as be the part, right? Ms. Janine, you had a question.
Well, your last class said per Schedule C.
They all say per Schedule C.
So is that just
No. I did it per Schedule C because a lot of people file that way, but these same things can be superimposed on the S Corp as well. Yeah, and I make those distinctions sometimes because everything I said can be is really tied to the Schedule C, but the S Corp has more deductions you can actually write off, more things, okay? And just because you're in business, I give you $200 a year. Profit sharing. Once you become an S Corp and your business is doing extremely well, you can write off up to $57,000 a year in tax-deferred compensation for retirement. But the formula is 25% of your profit. So your company has to be doing about $200,000 in profits to write that amount off. But the point is, at 56 years old, my limit right now is $7,000 in a traditional IRA. Under my company, my profit is $1 million. I can write off $57,000. My company can pay that for me. I don't have to count it as income, and it moves along tax deferred, meaning I didn't got to pay tax on that $57,000 right now. I pay taxes later. That helps me get to my retirement income a whole lot faster if I made more money. You feel me? So, and it's bigger than the $7,000 that's given to me as a write-off for a traditional IRA. So I can write off more money through my company. All my rents are deductible. Any repairs I've done deductible. All your supplies are deductible. All your taxes and licenses are deductible. All of that. How many of us take vacations? Why? Why? Relief. Why? Okay. How many of us are in business then? All of us are in business because we're in business, right? Yeah. So why do business people take vacations? Why? Do any real business people take a vacation? No. What do they take, Miss Jenny? They don't take no break either. I don't take a vacation. Who said that? Thank you. Thank you. Exactly. Can I do hair or cut hair on a cruise ship? Yes. Aruba? Hawaii? San Domingo? Dubai? Can I find a barbershop or a salon in those places? Okay, so why am I taking a trip? Thank you. Y'all get it right. It's all terminology. My mama lives in Florida, Jacksonville, Florida, around the corner from Mickey's house. So when I go to Florida, I'm going for what? To check on some real estate, look at a barbershop or something. But I'm going to say hey to mama while I'm down there. Hey, mama, what's up, girl? How you doing? So why am I going to Florida? Why am I going to Aruba? Why am I going on a cruise ship? Write your cruise ship off. Give me $2,000 for the cruise. All right? I'm in, where am I? I'm in Lancaster, not Lancaster. I'm in Norristown. Now, Norristown is not considered high cost, but Philadelphia is. So they'll give you $98 a day per diem to eat in Philadelphia. Now, I eat, but not that much. So all I have to do is prove that I was in Philly. How do I prove I was in Philly? I flew up here, right? Airline ticket, hotel receipt, and I can write off $98 for every day that I was here. Now, if my wife was with me, that'd be 2 times 98. All right? So I don't have to have a receipt for food because I'm going to do per diem. I just got to prove I was in that city. Okay? So I travel quite a bit. So can you give me, just give me $2,000 for the year for the food. All right? Now, light, gas, and water. How many got kids? Now, I got grandbabies. I have one daughter. She's 37. She can't stand me. Do no daughters like their daddy? Do any? See? You need to talk to my daughter. Talk to my daughter why she don't like me. Got a question?
Can you say on the live, say, if you guys want the book, just
okay.
put the number 1 up in the comments.
Okay. All right. If you want the book, put number 1 in the comments, and the guys on the visual will be able to get to them. Okay? So we'll make sure you get the book. Okay? Put a number 1 in the comments. Just a number 1 in the comments, and we'll make sure you get the book. We got plenty. If they're not here, they're back at the office. So we'll take care of you. Okay? So where was I? Kids. There's a $12,000 exemption per child that you can write off this year. Now, here's the deal. The child have to prove that they can do the work, and they have to be your child or somebody in your household, like cousin, nephew. They live in your household. So my grandbabies are 8 and 12. And they're sweet as they want to be. Their mama is mean. But my grandbabies are sweet as they want to be, right? As long as they can do the work. So you got a 2-year-old, 3-year-old baby, son, pick up that towel for daddy and put it in the pail. That's worth $12,000. You didn't hear what I just said, did you? Okay? Now, this is in the IRS regulations. So I'm not saying, if you're in TV land, radio land, and you see anything or you hear anything that I said that is not true or correct, I don't care what your status is. You can be director of the Internal Revenue Service. You can be a CPA. You can be whoever you want to be with all kinds of credentials. I want you to challenge me and hit me up and straighten me out because I should not be up here telling falsehoods to nobody. So if you can check me on something, I want you to do so. Now, so you can write that off. Now, here's the best part about it. You ain't got to prove you gave your kids nothing. They ain't got to prove they received nothing, and they ain't got no tax return to file. You didn't hear what I just said, did you? That just literally means you got some babies, you got some write-offs. Okay? All that comes as a winner to you. Okay? Write your cell phone off. You say, well, why your cell phone going to be 100%? Well, my cell phone is 100% because all I talk to is my business people. All I talk to is my business people. What about your wife? My wife is part of my business, so I can talk to her too anytime I want to. All your magazines, all your education. If you go to lectures and seminars, your shoes you work in. If I was your accountant, I would ask you how many pair of shoes do you wear to the salon? What types of shoes do you wear to the salon? And how many pair do you buy in a year? I buy 3 or 4 pair, 5 or 6 pair, $200 a piece. I write that off. Uniforms. Everybody have a look at the shop. Most of us don't wear our really, really good clothes to the barbershop or the beauty salon. And sometimes on Thursday and Friday, well, I don't dress up anymore at all. I got one suit I've been wearing it for 25 years. It just happened to be a pretty good suit. I wear jeans every day, jeans and tennis shoes. But that's my look, jeans, tennis shoes, and a sweatshirt. But that's my uniform. So I write off my jeans. I get them from Walmart. They cost $13. My sweatshirts cost $10. But I wear the same clothes, the same type of clothes every day, not the same clothes every day. But that's my uniform. I write that off. Every client you have, you can get them a gift, $25 a year. You ain't got to prove you gave them nothing. They ain't got to prove they received nothing. They just have to be a client. Now, how they become a client? They have to be on your books. They're a client. So you got 100 clients. I missed a whole bunch of stuff. Give me $2,500 for that. I done missed a whole, but where am I, Kendra, where am I right now? Now, based on what we just talked about, the deductions, if you went back home, took out your tax return, and you did this business full time, and you plug these numbers in. Now, these are just small. These are numbers have been artificially reduced. What number do we come up with so far? 28,000 deductions, and we haven't even scratched the surface. Imagine if we really dug for some real deductions. Charitable contributions. Most of us, with the new Trump law back in 2018, we can't itemize anymore because they give us a standard deduction of 24,000. So, but most of us love our Jesus, right? So instead of you writing your tithes from your house, you switch the check, write it from your business, and write the entire amount off. Any questions? I got about 10 minutes for questions. Any more questions?
All that in the book.
All that's in the book, yes, sir. All that's in the book. Is there anything you want to ask me about me, my business, or anything?
How about my tax man?
I could be your tax man. It might be a little bit too late for that part, though. But I'm going to give you my information here. By virtue of you just being here in the class, I don't have nothing free to give you other than what I just gave you. But here's my information if you want to get in contact with me. Now, again, by virtue of being here, you guys can call me. Now, my preference is you call, that's my cell number, and my assistant, her name is Sharita. You can call her too. My preference is you call Sharita because I may not answer the phone. Now, all this information I just gave you is in the book. My phone number is on the book. My phone number is in the book, on the book as well. Yeah, come on, man. Pass that back for me, please. But I want you to be able to, if you have a question, don't hesitate to call. Don't leave out of here. Hold on, because I don't want that to happen too many times while I'm on TV here. That don't look too good. No, Kendrick, stand here, man. Stand here, and hang on to this for me. I know they ain't gonna take it from you. If you want to, if you stand on the side for me, Kendrick. Stand on the side for me right here. No, stand on the side. There's some more books on the table. If y'all want to pass Kendrick that off camera, you can do that. But now y'all take it from him. Now my thing is, can I get it from him? That's You got more questions, sir? Are there any more questions? Any more questions? I'd love to answer whatever you got. Now here's my simple life. Here's my simple life. I've never left my house thinking about how much money I could make. That has never been my goal. Never been my goal. All I wanted to do was survive. That's all I wanted to do. And my thing is I was sharing with Miss Janine and Laura this morning that the only way for us to build anything, especially when it comes to business, especially in this business, is to consistently take care of people for a long period of time. Money should not be your motivator. Now, people will read your greed. They will read your greed. If you're out to hustle them and get their money, they'll read that and they ain't gonna come back to you. You have to take care of a person. So I leave my house every morning thinking about how many people I can satisfy. See, I do believe in karma and I believe in Jesus. And the thing is, the world won't allow a servant to go hungry. If you take care of them people are going to take care of you. Stop worrying about the money. The money will come. Now, once you get it, don't be greedy with it, because it's still part-time to you. I was single for 35 years. I just got married 20 years ago. But during that time I was single, I saved 80% of my money. 80%. Now, I'm going to tell you how that benefits me. And you can imagine how the benefit is. But here's what happened. Pandemic happened a year and a half ago, right? Well, a year ago. Pandemic happened a year ago. Most of us lost our mind because we were not prepared. Even those who thought they were prepared. Now, if somebody told you, what's your name, sir? Edgar. Edgar. If somebody told you, Edgar, in 2 months, Edgar, your barbershop is going to shut down. In 2 months, your barbershop is going to shut down, be shut down for 30 days. If they told anybody that, you can plan for that, right? You can plan for that. But they showed up to all of us and said, hey, shut down today. And you can't open up tomorrow, and I don't know when you can open up. You can't plan for that. There's no way you can plan for that. So what do you have to do? You have to always be prepared. So in my mind, what I thought about when that happened was not so much about what's going to happen tomorrow. My thought about was, I have 35 years of 80 saved up. I'm living off 20. So imagine, there's no stress for me. I stress for other people, but there's no stress for me in the family because I'm prepared. Now, no one told me the pandemic is going to hit, but I always knew that one day it was going to rain. I always knew about that. So the things that become important shouldn't be what's in your front pocket. It's what you can save on a consistent basis. Now, you might not be able to do 40. Let me say do 20, but do 40, do 60. Make it hurt a little bit. If you're able to do that, then when you get 55, 56 years old, you got options. You have options. And it's not always wrapped around the money. It's the freedom of it. Things happen for you when people think you have stuff. Keep your credit straight, as girlfriend said this morning. Pay your bills on time, as Miss Green and Laura said this morning. That stuff benefits you. Come above the radar. You don't have to keep hiding under the shadows. And now I'll say this, I might be wrong for saying this. I don't think I'm wrong, but I had some, I ain't gonna call them friends, but some dudes who was dirty dealing. Y'all know what I'm talking about. And my thing with them was this. They would come to me and say, hey man, look, can you straighten this out? Can you straighten it out? Only if you get out of the game, I can straighten it out. Because Uncle Sam said, if the money is earned and they paid a percentage of it, they would actually leave them folk alone. So my thing with us is this. If you're under the radar, come above the radar, live the life you can live. See, if you're living out of your front pocket and everything is in your mama's name, your sister's name, your girlfriend's name, you'll never be able to live up to your potential. Because nobody ever give you nothing. There's nothing in your name. You got no credit. You know, you keep buying these cash cards because you can't get one, you know. And people give you stuff when you have good credit. They don't even act. They send you checks in the mail. I have a bank. I bank with Arvis Bank. It's a Walmart bank. Walmart owns the bank. Walmart would send me checks. I have a deal that's doing one of my laundromats, and I'll have like 5 minutes left. How much time I got left? About 5 minutes. Okay. Okay. So I was doing a laundromat, right? So I went to the banker to transfer some money, $100,000, to build out this laundromat. So I was moving my own money. So the banker said, "Hey, look, tell me your story." I said, "Okay, man, look, what I'm trying to do is I'm gonna move 100,000 from this account, put it in a CD, and I want you to give me 100,000 on top of that as a line of credit, so I can build the laundromat, keep my money, and then when the laundromat is built, I'll give your money back to you." He said, "Tell me the rest of the deal." I said, "Well, I'm doing 3 laundromats this time." He said, "Well, how much are they?" He said, "Well," I said, "Well, the first laundromat is 350,000 plus the 100,000 I got into this one." He said, "I'll give you the money." I didn't have to ask for it. He said, "I'll give you the money to do this one and the other 2, almost $800,000. Why? He saw my portfolio. I had a couple $100,000 sitting in a bank account. I have 780-something credit score, and I have consistent deposits. Consistent deposits. See, I didn't need his money. It's a good place to be in, folks. It's a good place to be in. Now, of course, your numbers may not be as high as mine. But the point is, when you get to the point of where they're asking you, can you have some money? See, banks only make money one or two ways. They loan money at high interest rates, or they do dividends, or they do services, fees, when they charge you for bank accounts, stuff like that. But they make most of the money from interest when you borrow that money. But see, they're going to get you and you and you at 18%. And guess what they're going to do with that money? Give it to me at 2. Because they know they can take you, but they can't take me. But they need me because my numbers are bigger, so they can keep giving you 18. They don't give you 1,000, 2,000 at 18%, but they're going to give me 300, 400,000 at 2%. They know they'll get it from you at 18, but they won't get it from me because they ain't going to pay 18% for no money. So it's a game, but you guys can win that game because you control your, people with jobs can't win that game. They can't win that game like that because they don't have the freedom. Ask your question, sir.
So,
I'm sorry, guys.
so first off, y'all out there in TV land, right? Internet land. Thank you. We had a couple questions. And I hope you guys enjoyed this. If you enjoyed this, please let me know right now. You enjoyed this, great. If you enjoyed this, give me a thumbs up. Definitely appreciate your feedback. One question is, why is your company under an LLC? I think you explained it, but make it clear for them.
Okay, in Missouri, LLCs in Missouri don't pay annual filing fees. So I created an LLC to keep from paying annual filing fees, but my company is superimposed as an S corp, so I can take advantage of all of the gains of a corporation.
Okay, so wait, I have a follow-up question for that. Where's my LLC at?
Same way, you're S corp as well.
In Missouri.
No, you're
I'm
you're
Tyrik, in Lancaster, Pennsylvania.
you're Pennsylvania.
S corp.
Same benefit.
Exactly.
So it doesn't matter where your corporation is. The laws for LLC, they're kind of the same in most state jurisdictions.
So, here we go. I had a couple more questions here. Okay. For someone who is about to open a 5-chair shop, I need your services. What's the best way I can reach you? Email? Or?
Yeah, you could call, just email that. Email us online right there, the IMEMS 98. Put your information down and somebody get in contact with you real soon.
Okay, so now I really would like him to answer my last question because I only have 5 days left in school. So the question from this person is, where's it at? Oh, I think it's down here because I was scrolling down. Can I use my tuition, which is a student loan, as an expense along with the shop rental and remodel and tools and equipment?
Yes, you can. Anything you do for outside education or advanced education, whether it's for the business you're in now or a new business, is a deductible expense against your corporation. Because any advanced education will enhance whatever education you presently have, would enhance your business. So yes.
Awesome. I think we have one more. Is there any fees associated with switching the way I file from a Schedule C to an S corporation?
Yeah, there are fees, but you want to hit me. Well, I can tell. The fee normally ranges between $260 and $285 to go from an LLC to an S corp, and that's my fee across the board, across most states. So it's a pretty standard in most states. So yes.
So guys, thank you so much for joining today's live. We're going to end this in about 10 seconds, but in about a few minutes. We got 2 more questions. Oh, is this one? 2 more questions. Go ahead, question.
Oh, and I just wanted to know if you had Cash App.
Yeah, we do Cash App. Yeah, we take Cash App. Yeah.
So thank you guys for joining our live today. We definitely appreciate you. Thank you for all the shares. Thank you for the comments. Thank you for the questions and for making this interactive experience here at Premier Barber Institute, along with our students. A memorable one for us, and it's not the end. This is just the beginning. We're going to continue to stream Premier Education from this platform, so stay tuned. Make sure you follow and share. There's a lot of people, and so if you're an influencer or educator and you want to teach on this platform, you can come to Premier. We will share your information with you. You can keep the video content, but we will stream it. And you had probably about 60 people who put ones up for a book. So if you do the math, this was a free class for many of you, But $25 times 60 people,
It's a ham sandwich.
that's so it benefits you to come to premiere, get filmed, give out some good education and some information so we can continue to elevate the culture in the right way. We want to thank you guys for being with us. We appreciate you and we love you. Have an amazing day. Remember, serve your needs by serving the needs of others first.
Thank you, guys. I appreciate it. I really don't take this stuff lightly. You taking the time, my man. Thank you, sir. Donald, appreciate you, man. Yes, sir. I appreciate that. All right.